Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with Stephen Ingles.
And here are our top stories. Tech in focus today, with Tesla jumping in late trade after a surprise blowout quarter to the upside, of course. And in Asia, SK Hynix posting record quarterly profit and revenue on strong demand for AI memory chips. The broader stock market benchmark, though, in retreat after Treasury yields pushed higher, investors scaling back Fed cut bets ahead of fresh data and, of course, the U.S. election. Plus, President Xi Jinping meets with India's Narendra Modi for the first time in a couple of years, promising to strengthen ties and manage differences.
All right, we are still talking about Asian stocks, relatively speaking, doing a little bit better, but we are still hovering on those 1 month lows when it comes to Asia stocks. So there's still a bit of caution in the air, just given that we have continued to see Treasury markets and yields picking up. They stabilized a little bit here, but that U.S. 10-year yield is still hovering around that and really getting to that 425 level here this morning. So watch that space very closely, because you take a look at what we've been seeing with dollar yen, for example. We briefly touched 153 last night. And you take a look at what Ueda was talking about, these IMF meetings. He was saying, look, the fact, the right sizing the BOJ normalization is what keeps him awake 24/7. That lack of clarity, you pair that with more resilient data out of the U.S., that's why you have a weaker yen there. And term premium, basically on that 10-year note in the U.S., is basically at the highest that we've seen since November. So we're getting towards the peaks of 2023. So does that mean we have more room for yields to pick up is the key question here. NASDAQ futures are watching very closely, punching pretty well there, up about 0.5%. We talked about Tesla. So really that blowout quarter when it came to, what the guidance was, cash flow seems to remain pretty strong as well. And we're watching very closely what goes on with that storm in the Philippines. So canceling FX trading for a second day. But mind you, stock trading still going to be happening as well. You take a look at what goes on when it comes to the term premium. I talked about this earlier. So we're hitting the highest since November, right? So you take a look at what swaps are pricing in right now. It's less than 100% certainty the Fed's going to cut rates at each of its two last meetings this year. You add that with what's going on with the election. So there's the fiscal and tariff risk. You have the resilience eco data on what's behind this sort of surge in yields. You start to see there are mounting risks as these yields start to surge. So there seems to be also the whole Trump trade seems to be pricing in again, that this potential sweep from Republicans that is giving some of these bond vigilantes the green light these days. So that certainly is one thing to watch. Term premium, and then China. So things are looking, relatively speaking, pretty quiet in the mainland. You take a look at how things are looking up. We're shaping up to be maybe a negative open there. Nasdaq Golden Dragon fell about 1% last night as well. The currency still on the weaker side at 713 levels, Steve.
All right, Yvonne, we also have the agenda coming up right now, what to watch out for in the greater China. Of course, we're going to be looking at China stocks, the CSI 300 rally, the legs that it might have, and what else could be coming down the pike as far as stimulus coming for the benchmark Chinese index. We have a few guests who have their thoughts on that as well. We'll also be looking for a new debut. We had one yesterday, of course, here in Hong Kong. We have another one that might even trump that one. Horizon Robotics trading debut, $696 million listing today. This is a company that provides AI and robotics for the automobile industry. It's backed by Alibaba as well as Baidu. So keep an eye on that as Hong Kong IPOs start picking up. And again, we'll always be watching those Chinese government bond sales and, again, corporate earnings season across the mainland.
Yep. Let's get to our guest now, Andrew Swan, head of Asia, ex-Japan equities at Man Group. Andrew, it's great to have you back. It's been a while. It's great to see your face again. But really, it's interesting, right? It's coming on a backdrop of a Fed that has kicked off this easing cycle. There's still a lot of questions about the pace of which we could see it moving forward. But I was reading your notes, and you said you were the most positive towards Asia as you've ever been. Why?
Yes, and well, good morning. Look, I think the reality is we're at a pivot point in policy globally, and that pivot point is turning what has been headwinds for growth and corporate profitability in the region into potentially tailwinds. I think the developed market monetary policy cycle is extremely important for Asia. Normally, it's just the smaller economies which are a bit hostage to the Fed, but I think in this cycle we've seen China also hostage to develop market rates in order to preserve currency. And also, obviously we have the policy in China, the pivot in China, and the combination, I think, of both cyclical and structural policy changes coming down the road, which will be much more supportive for growth in the region. So, the starting point here is an asset class which is perennially underperformed and disappointed right at a time when we're moving from tailwinds to from headwinds to tailwinds when it comes to policy, both locally and globally.
Andrew, Stephen Engel here with Yvonne. So if there's going to be a shift into Asian equities, how much are we looking at and over what time frame? I know you are saying that Asian equities ex-Japan are essentially trading at about a 30% discount to their global peers. So how much upside and over what time frame are we looking at?
Look, it's always difficult to give you upside, but what we do know is in the past, when China has shifted its economy from deflationary forces to reflationary forces, and there's been a number of these incidents in the past decade or so, the returns to equities have been very strong in a short period of time. And obviously we've seen a pretty sharp rally as policy has pivoted. But, if the policy does follow through here, and not just stimulus and cyclical policy, but structural policy, these markets, have a lot of potential.
Andrew, can you tell us a bit more about that call in China? Because you seem quite confident that China is able to break out of this deflationary spiral to drive higher domestic demand. You also mentioned a significant boost to domestic consumption, which we haven't quite seen just yet, even in what we've heard in these policy announcements so far. So what gives you that confidence?
Look, I think, first of all, policymakers in China understand the challenges. I think the delay in a response to start to address those challenges, particularly around deflation, have been twofold. One is they can't use the old book of tricks, being just more credit in the system, given very high levels of credit. But secondly, I do think that the policymakers, particularly the PBOC, has put currency stability as the #1 priority, while the Fed has been running, tight monetary policy. The currency, the yuan, has been actually fairly strong relative to other currencies, simply because real interest rates in China have effectively been pegged to the US. Now, that pivot, I think, is absolutely critical, and that the Fed has made, because after that, that's when you've seen the policy response start to emerge in China. So there's a cyclical element. What we are looking for, though, and I think this is further to come, it's always difficult to get the timing of this right, but I want to see a marriage effectively between the structural policy changes, the reform initiatives that are very much needed in China, and I think, and the cyclical policy, which we've seen more recently. Those reform sort of, let's call it a blueprint, I think you look to the middle of this year at the third plenum, and you can start to see what reform may look like for China. It has to be more demand in the economy, and I think that is really where consumption has to be supported, not through short-term cyclical measures, but through structural changes that promote consumption more than they've had in the past. So we do have a very high household savings rate in China, and it's working out policy that can lower that savings rate, create incentives for consumption at a time when expectations are extremely low and growth is very low. We are reasonably confident that's the path forward here for policymakers. But the proof will be in the pudding in the coming months and year or so.
Well, Andrew, this is a long-term process. If you're talking about structural reform, you talked about household savings at about 30% of, households' savings is in that cash in the bank, and 60% of household money is tied up in property. There's no end in sight to the woes in the property market. Yes, a reflationary process by the government leads to gains, but Are they doing enough to satisfy these people who have very low confidence that this is going to be turning around after 24 consecutive months now of factory gate deflation?
Yeah, look, it's a big task, but I think the importance of it, solving this problem, is not lost on policymakers. I'd say in the last month or so, if you were already bearish on China, there's probably enough reason to stay that way. If you're positive on China, there's probably enough, in what's happened so far to stay in that stance. We do need to see some of this vagueness, I guess, in policy come and be much more clearly defined in terms of what the size and the measures are that are there to break this cycle. It is a pretty deep cycle that we're in here in deflation, but I do think we now have the commitment of the senior leadership. And just look at last Friday, the BOJ governor has mentioned the number one priority now is reflation. I think that's critically important.
So how do you position around this market now after this rally? Things have lost a bit of momentum of late. Andrew, what can you still chase? What we need to take profits on?
Look, everything we do is really fundamentals. We're trying to understand the policy environment, how it's going to evolve, and who fundamentally benefits from that at the corporate and the sector level in China. I think at the heart of what we're trying to do here is see a shift in China from deflation to reflation, and with cyclical measures in terms of monetary and a bit of fiscal, but also in terms of structural policy and, as I said, to try and increase consumption at the expense of savings. Now, the obvious target there is going to be consumer stocks. They've been hit pretty hard. And consumption growth is low single digits now. So I'd say consumption related stocks actually looks quite interesting, but it goes beyond that if this policy is successful, because I think there is exposure in financials, potentially higher bond yields, better equity returns in the market, and even through to industrials. I think if you look at a lot of industrial companies in China, they've really suffered in this environment. And as demand starts to pick up in the coming year or two, I think you can start to see a bit of pricing power come back against what is currently excess capacity across most industries in China. And that can be very good for profitability. I think you also, final point on this is, the starting point is low expectations. Corporate profitability has been under pressure. Companies are generally cutting costs. And so when you get that pivot in revenue that generally comes with this sort of policy environment, the impact on profitability can be much higher than you think at this stage.
Okay, that's interesting. And it seems like, in terms of just allocation and what flows are telling you, how should I look at, to fund this sort of China trade that you're talking about, Andrew? Do I look at India and I take profits there and rotate to China? Because that seems to be more of a growing sort of trade now. Or even do I take profits out of Japan, for example?
Certainly, I think there's more money to come to the region. It's an asset class which is very under-owned. And so I think maybe as the recovery starts, you'll see more investors drawn back in. I do believe investors are holding off at the moment, even though there are some encouraging signs on policy, maybe waiting for the US election to pass, because I think that's seen as a risk. But I do think new money comes to the region as this policy evolves and the outlook for growth improves. Within the region, our preference has been China over India this year. I think India's story still looks solid longer term, but we're at almost the opposite end of that risk-reward scenario where India, earnings growth expectations are high, valuation multiples are high, at a time when liquidity is actually slowing down. Whereas you compare that to China, where earnings growth expectations are low, valuations low, at a time that policy is becoming more supportive. So we continue to prefer China over India at this stage.
Well, Andrew, you brought it up, so I'm going to ask you, the U.S. election, how much of a risk is it to that scenario for being bullish on Asia?
Well, we obviously don't know the outcome at this point in time, but I think, it's pretty clear the way the world is sort of evolving. There are challenges in the relationship between the US and China, and I'm not sure whether, the outcome of the election changes that, to be honest. I guess the difference, though, is versus 8 years ago, where the world was integrating, and so tariffs and policy out of the US became a bit of a shock, not just to investors, but also to companies in the region. I think the world now understands we're living in a very different sort of geopolitical landscape, and businesses have changed and relocated and are much more aware of the challenges on geopolitics. I think the most interesting stat on all of this is that China's share of global exports is pretty much exactly where it was 8 years ago. So yes, it has fallen into the US, but other markets have picked up that slack. So, I guess there's always the risk that something surprising happens here, but I think there's a lower probability of surprise and therefore a lower probability of impact at this point in time.
All right, Andrew Swan, head of Asia ex-Japan equities at Man Group. Thanks so much for joining us this morning on The China Show. Well, still ahead, a new Bloomberg poll shows the presidential race in a statistical dead heat. Nice pivot from Andrew there. We'll be right back. This is Bloomberg. And welcome back to The China Show. A new Bloomberg News Morning Consult poll shows the presidential contest between Donald Trump and Kamala Harris could hardly be tighter. The candidates are statistically tied among likely voters in each of the 7 swing states and enter the final weeks of the campaign scrapping for every undecided voter. Our political news director, Jody Schneider, she joins us now. Good morning, good evening to you, Jody. What do the results really show in terms of the closeness? I guess you couldn't get any closer in these 7 swing states as we're just 2 weeks away from Election Day.
Yeah, that's right, Steve. It's 49 to 49%. You can't get any closer. And that's across the 7 swing states, the states that are effectively going to determine who wins the presidency because they will determine who wins the Electoral College. We've seen in recent elections someone winning the popular vote and then not winning the Electoral College. And both these candidates want to avoid that. They're working very hard in those swing states where it's effectively winner takes all in each state. That they have to win those votes. They have to get to 270 to be president. So they're out there, as you see, on these maps, that they are within just a very, very tight margins of each other. We've seen some movement from previous polls. But it's tightened the last 2 polls, and the final poll before the election, which is less than 2 weeks away, really shows that it couldn't get closer.
Yeah, I mean, you talk about the potential for that clean sweep, but tell us a little bit more about who holds the lead on the most important issue leading into the election, which is, of course, the economy, Jody.
Yeah, that's right. And that's Donald Trump. He's up 50% to Kamala Harris's 45% on the economy. And that has, been a real Achilles heel for her, coming off of Joe Biden being in that race, even though things have gotten better in the economy. Inflation has tamed some. They have avoided they have been able to maintain that soft landing, avoiding a recession. Employment is strong, but still many people feel as though inflation is still too high. It's too hard for many people to buy a home, those kinds of issues. And that favors Donald Trump.
Jody, thank you. Jody Schneider there, our political news director for Bloomberg TV and Radio, joining us out of D.C. this evening. And as you mentioned, less than 2 weeks to go. And really, Steve, when you take a look at how, FX traders, options traders are looking at this election, and you're starting to see how it being expressed in the currency, especially in China. Take a look at what's really been priced in. Yuan volatility has basically been rising over the past month or so, and there's a lot of options traders are now thinking that maybe we could actually see some historic moves after November 5th on the yuan. So in particular, they're talking a little bit more about this premium of 23 for the yuan for overnight volatility. That implies about a 1% move after Election Day. A 1% move on the renminbi rarely ever happens, Steve, as we know. So volatility expected to really remain the name of the game there in the following days after this election.
Yeah, I mean, that's right. I mean, Jody's laid it out pretty clearly about the uncertainty and that there have to be hedges perhaps even both ways. But there's that trading band, obviously, 2% within the fixing rate.
Yeah.
We rarely ever see that. But again, that 1% you talked about is significant.
It's not all right bearish at this point. I think people still have the assumption that maybe that, PBOC might have to step in.
Yep.
So we'll see. Yeah.
All right, let's take a look at now other stories making headlines around the world. Chinese President Xi Jinping and Indian Prime Minister Narendra Modi have met on the sidelines of the BRICS summit in Russia. Xi telling Modi the two countries should properly manage their differences over disputed Himalayan borders. It's their first bilateral meeting since, I think it was November 2022 in Bali, after easing a 4-year border standoff earlier this week. Vladimir Putin says the BRICS grouping shows that a multipolar world is being created to challenge the U.S.-dominated global order. The Russian president hosted leaders of the newly expanded bloc this week. Putin says more than 30 nations are interested in joining the group, but current members are split over the idea of further expansion. And U.S. officials say North Korea is sending troops to Russia, confirming the movements for the first time. National Security Council spokesman John Kirby saying about 3,000 North Koreans are training at 3 sites in Russia. And Defense Secretary Lloyd Austin says there's a serious possibility that they will be sent into combat.
All right, we're taking a look at one debut here this morning, another one in Hong Kong, Horizon Robotics. Now the shares are jumping some 20% in this Hong Kong debut after raising close to $700 million in this IPO. So strong demand coming through, attracted investors from worldwide, really, and even some cornerstone investors, including like some Alibaba and Baidu as well. So this likely could continue to boost sentiment towards Hong Kong's IPO market. But yes, they're talking about automation. They certainly talk a lot more about their customers, include some of these big car makers too.
I mean, there's strong demand for this, no doubt. I mean, and when you start, you remember the heady days when we said Alibaba-linked company or Baidu-linked company, Tencent-linked company? Of course, a lot of that was dismantled in the regulatory reform of the platform economy in China, and that's probably reflected why Horizon Robotics is going to list at raising $696 million, compared to Kuaishou in 2021. They raised more than $6 billion. Different times, but better sentiment for Hong Kong right now. Plenty more ahead. This is Bloomberg.
All right, your pre-market in Hong Kong looking like this right now. See a bit of red across your board. And HS Tech seems to be driving things lower this morning. We're down about 1% as well. In terms of stocks to watch, EV sector very much in focus after those Tesla earnings that came out. It seemed like we're seeing that sort of positive reaction as we were expecting here at BYD, down some 1%. And earnings to tell you about as well. So Sinopec net income falling 98% year on year. You're seeing the share slightly in the negative side as well. New Oriental, that also came out with earnings yesterday as well. That stock down some 5% after the outlook did disappoint as well. Hong Kong Exchange, though, that was a beat. Shares up as we count down to more IPOs coming through here in the city. The Open is next.
And welcome back. You're watching The China Show. I'm Stephen Engel with Yvonne Man. We're counting down the open to markets, in particular here in Hong Kong, as you can see. China also opening up in about 35 seconds. We're also watching, of course, the listing ceremony of the latest debutante on the Hong Kong market. That is Horizon Robotics, backed by Baidu and Alibaba, $696 million. It's not like a Kuaishou-sized $6 billion plus listing, but it is lifting sentiment as it's higher in the pre-market. Already Hong Kong has surpassed IPO proceeds from last year of $8.7 billion. Let's hear the bang of the gong as we're about to open in China and Hong Kong.
And just like that, Mr. Kai Yu there This is, of course, the software tycoon. He formerly used to work at Baidu, an AI scientist himself. Now his fortune swells to near $1 billion after this IPO.
A little more enthusiastic in the tech space than yesterday's China Resources beverage.
The tech guys always have more fun, I feel like, on these certain events. But certainly, yes, it does, set the scene on what Hong Kong is going to look like. You mentioned about the proceeds already exceeding what we saw in 2023. So this just adds to that boost in sentiment that we're seeing here in the city. We'll bring you the latest when it comes to the price action, but things looking pretty good. We're up some 30% for Horizon Robotics so far at the first bang of the gong. You take a look at how the rest of the markets are doing. We're slightly seeing a bit of retreat in Shanghai. CSI 300 is down about 0.6%. There is a bit across some of these CGBs as well. So, and when it comes to commodities, we continue to see some downside here when it comes to copper, steel. Iron ore is down 1.3% in Dalian. So that's certainly what we've been seeing, this kind of lull in these markets after this ferocious rally, which, in some ways could be healthy, as many guests have told us as well. CATL, we're not seeing too much in terms of the Tesla supplier after those robust earnings that came through from the car maker overnight as well. A lot of questions of whether now, do we look at this company as an EV company or still an AI company after what we saw in terms of the guidance from Elon Musk and co. You take a look at what Hong Kong is doing here right now. Of course, beyond just these IPOs, there's also still a bit of earnings to deal with here today as well. We're continuing to see some decline in shares, about 1% of HS Tech. Hang Seng is down about similar measures. So we're getting close to that 20,500 level as well. It's property that's selling off here today. And we're watching very closely some of these tech shares like Alibaba, which is down some 2%, Tencent's down some 1%. So you're not quite seeing that bit of optimism when it comes to the tech space here this morning. And we're watching very closely what happens with these Tesla suppliers as well. So what came out of that earnings call was the margin improvement. Cash flow still seems strong. And, of course, and upping that guidance when it comes to car deliveries certainly did surprise the market in some ways. But, you're not quite seeing that through the EV sector in China here this morning, Steve. Yeah,
one of the key takeaways, though, with Tesla's numbers, it snapped a string of 4 consecutive quarters of misses. Yeah. So they beat the street. That's why the market reacted in the after hours. But overall, NASDAQ was down and tech was down across the board in the U.S. on Wall Street.
Yep. Horizon. Is that what we're looking at right now? Horizon Robotics, there you go. We talked about that move. Obviously, this is certainly a bet on AI. It's a bet on autonomous vehicles and the like here, just given what this company does, right? So this is the software provider and hardware provider for these autonomous driving systems that saw strong demand. There you go. And you continue to see quite a bit of volumes there into that stock here this morning. And that certainly helps, right? But if you take a look at what the earnings season is shaping up to be, it's also not as optimistic, Steve, right? You take a look at how we're seeing in terms of forward guidance, EPS projections for CSI 300 companies have actually seen upward revisions about maybe 1.5% since that trough that we saw back in September. But if you take a look, things are improving, but we're still talking about 6-year lows right now.
Sure. I mean, it's going to take a while, and we'll talk about this with Vanessa coming up, our next guest as well, just about getting out of this deflationary cycle that's been, weighing down China, and for the last 2 years, really 24 consecutive months of factory gate deflation. And also, again, the consumer is just not necessarily participating at the levels that a lot of corporates across China would like to see. So deflationary pressures, they kind of self-fulfilling prophecy between the consumer and deflation.
Yeah, let's get to our next guest. As we mentioned, Vanessa Xu, co-founder and CIO at multi-asset manager VS Partners. She's here in our Hong Kong studios. It's great to see you. It's been a while, Vanessa.
Yeah, good to be back.
How are you? Let's start off with the earnings picture. Do you think earnings are going to deliver in any way to justify this rally that we've seen in the last few weeks?
Well, I wanted to take a step on the stimulus package, which the market has been focusing on. What's the headline number? How big is the bazooka? Is it big enough, etc.? But actually, it's a systematic approach from several departments of the government branches, and some of the policies will hopefully put a floor in employment. For example, the bailout stimulus for the local government debt. Remember, a lot of the average job creations are actually related to various local government spendings, which the policy will have a slightly delayed lag effect. So I think give it 3 to 6 months, we will see the employment situation stabilizing. We will see the income situation stabilizing. And another point is that after 4 years of a very nervous period of COVID shutdown and the global headwinds, so consumers have developed, and the corporate SMEs have developed a reaction function that is very conservative. So they sit on their savings, and that behavior change takes some time as well. And people cannot expect only a couple of weeks of the stock market rally would change that household behavior. And there is a little bit of PTSD that you need to allow time to heal it. But one thing I wanted to point out, the tourism, travel, which is a leisure, entertainment, household spending, has been recovering very strongly. So I think household spending recover will take some time, but it will come. So perhaps in 6 months' time, we'll see some reflation.
What about the foreign investors' appetite for China and the risks that it poses? There are opportunities, obviously, with prices down. Yes, they've come up from the stimulus, but there are opportunities. Do you see that wave coming in and lasting?
We begin to see some spring shoots of a recovery of the sentiment, although there are still some doubts as to whether or not this is fundamentally reversing some of the negative consequences of the past few years. In terms of the volatility, I think that's a very interesting indicator. We see some very large movements over the last few weeks. I see it as a tug of war of different types of money. First of all, it's the shallow money, it's the tourist money that try to get a quick scoop, and then you begin to see some serious long money fundamental to come into some high quality positions. So I think over time we need to continue to see if the fundamental long money comes in, then that's a good indication of the really long-term confidence restoring in the Chinese asset market. And by the way, I think when I was traveling overseas last 2 or 3 months, actually spoke to a lot of global investors. One biggest concern for very large fundamental wealth is that globally we have a serious debt issue. Not only in China, U.S. has a very big debt issue as well, although the symptoms are different. Whoever can have handle the debt issue better will have a longer resilience of the economy. I think the stimulus package recently by the Chinese government is trying to stem the long-term debt issue by expanding the central bank balance sheet, and that over time people will begin to see the effect of putting a floor over there.
And there's a lot of questions. You mentioned, is this just a tactical trade here right now? But for the long-term investors, are you seeing signs that China is still sort of that must-have sort of market to have in EM portfolios, or that China or Asia ex-China sort of story lingers still? Yeah.
I think Asia cannot ex-China because fundamentally it's a very, very deeply connected in the real economy, and the world cannot ex-China. If we look at the global portfolio, so another way to look at it is if we see a country as an asset class, say, then in Asia, with all the fundamental growth drivers, which market for global investors to express that is large enough, liquid enough, deep enough, holistic enough in terms of sectoral expressions and creative, innovative enough for the long term. And for large enough, very large global money, you need all of this to be meaningful in your portfolio. And there is only in China, Japan, and India. And
those are the three I was just going to talk about, because it's not necessarily an either-or thing, right?
Exactly.
There have been rotations when China was down into Japan, because Japan was starting to boom. They also had, of course, the significantly weak yen. But India did very well, took out a little steam as well. You just came back, I believe, on a research trip to India. What's your key takeaway as far as rotational into not only China, but also continual in India?
Well, from the again, very large and fundamental investors, I think that's less of a rotation. Rotation is more of a relativity, short-term tactical valuation rebalancing kind of trade. And foundationally, India and China are different economies. And I'm not fancy of the term as whether India is the next China. Next China is still China. Next India is India in its next version. And for example, India started with a very strong engineer and software services industry. Now it began to industrialize and manufacture oriented. So the service industry creativity and the design element will add a lot of value add for its manufacturing businesses, which compete very differently from Chinese manufacturing that start from the ground up and very muscular manufacturing and then move into service and software. Just one example. And India, for finance and fintech, they have a billion smartphone user and also have a universal payment system so that they can leap forward in a lot of e-commerce and services industries without the physical infrastructure. And thirdly, people always, often criticize India's poor infrastructure, but it's not going to be central government or local government-led investment. It's going to be private sector-led, assisted by the government. So it takes longer time, but perhaps to develop healthier economics and return on capital.
You're also overweight Japan still. I got to wonder, this is a market that seems to be always held hostage to either rising bond yields in the U.S., this weaker yen story that's been playing out, or on intervention watch again for the currency. What keeps you bullish on Japan?
Well, Japan has a lot of hidden industrial technology champions that are actually dominant in the global various sectors where they are. I think that became very apparent in the last 3 years. If people talk about chip war and you look at the value chains deeper, and the Japanese has a lot of strong companies with strong ROE and cash flows in those spaces. So we are benchmark agnostic by overweighting, then I mean actually that we have to go very deep actively to pick those sectors. And then another thing is Japanese conglomerate now will see more activities to, for example, sell off assets, break them up, restructuring that surface value for some very large names.
Vanessa, thanks so much for your time. Please come back after your next research trip, wherever that may be. All right, Vanessa Xu, she's co-founder and CIO at VS Partners. All right, shares of SK Hynix are a little weaker in Seoul, despite the chipmaker posting a record quarterly profit. Let's get more on that with our tech reporter, Annabelle Drewlers, who's in Sydney today. Annabelle, the numbers were good overall, so why the drop?
Well, we've seen the drop, and I'm sorry, Steve, actually, it's just turned positive in the last few minutes here this morning, but it does seem like that weaker reaction we had initially was down to a lot of the good news already being baked in. This is a company, of course, that's already risen around 35% this year, and investors had pretty high expectations coming into the numbers. So actually headline revenue was a slight miss. Operating income, though, that was what we're really tracking, and that was a beat. So coming in at 7 trillion won versus an estimate for 6.9 trillion won. Margins as well, they improved for the business, and that's important because it tells you just how much revenue SK Hynix is making from its pricier products, and this speaks to HBM in particular. HBM, I'm talking about high bandwidth memory chips. They're a type of DRAM, but they're essential to building out AI infrastructure, and as I said, they're pricier than other sorts of traditional DRAM as well. This is where SK Hynix sees a lot of its revenue coming from moving forward. Actually, they're looking for HBM to account for about 40% of overall memory revenue next year, up from the current 30%. And they're certainly orientating their CapEx plans in this direction as well, building into these areas where they can make more money, these premium products, when you still continue to see weaker demand for legacy chips and weaker prices as well for those types of products.
Val, that's all the time that we have. But yeah, thanks for breaking down those earnings for us. Annabelle Drewler is joining us out of Sydney. Well, coming up, we're discussing more earnings. Tesla beating with Gerber, Kawasaki Wealth and Investment Management's Ross Gerber. He's going to break down the earnings for us and what this means for the Mag 7, with Tesla really kicking off that Mag 7 earnings season with a beat. This is Bloomberg.
I do want to give some rough estimate, which is I think it's 20 to 30% vehicle growth next year. Notwithstanding negative external events.
And that is, of course, Tesla CEO Elon Musk on the company's third quarter earnings call. Let's bring in Ross Gerber, president and CEO of Gerber Kawasaki Wealth and Investment Management. Good to see you, and thanks for joining us. So where are you on sentiment towards Elon Musk? I know that you've soured a little bit over some of his extracurricular activities. The Robotaxi event was sort of lackluster, according to many people. But look, they just beat the street, snapping a string of 4 consecutive misses. Where do you weigh in on Tesla right now as it stands?
Yeah, you mentioned how I thought about Elon Musk or how I think about Tesla, because they kind of are different things, because I still very much love Tesla, and their products are, the best cars in the world, and they make the best software in the world for cars, and the model of selling EVs to, make a difference in climate is really the Tesla that we own and that we love and that we invested in from the beginning. And the way that Elon's pivoting the company now into businesses where it's very uncertain what the potential is, and then where there's already a lot of competition and something that Tesla really still hasn't mastered yet, which is autonomy. It's really it's a tougher pill to swallow. So on top of the extracurricular activities where Elon basically helps the guy that wants to hurt Tesla, it's just hard to explain at this point.
Yeah, politics aside, though, it seems like they focused back to the core business, right, this time around. They're talking about their bullish note on vehicle sales. They want to deliver more than 500,000 a quarter for the first time ever. How should investors be looking at this stock now? Is it really an EV company or an AI company?
Well, Tesla's at its core has always been a technology company, is the way I've always looked at it. And AI and autonomy was the first real application of AI that not only would save lives, but made a lot of sense, and certainly for Tesla to develop. And that's irrelevant of like large language models and, generative AI and all this, really long-term thinking stuff that's going around now. So, we love AI, but where it's at to what Tesla does and where Tesla's at don't necessarily jive. And that, I think, is the issue. We need to be focused on autonomy, and we need to be focused on solving that. And we're just not making enough progress in my mind. And now the competitors are, really getting good at this. And Waymo's in my neighborhood, and they're doing a great job. And it works in LA and super tough traffic. So Tesla's got competition, and they got Uber, and they got all these other things. So I'm not into that business.
Well, Ross, is the FSD, full self-driving, a bit overblown at this point? Because, again, China, I just did a large series on the Chinese competitors who are doing less of a vision base. They're doing LiDAR and other multiple different types of sensors. Are you on board fully with FSD, or is there still a long road ahead, especially when it comes to China, because they're still awaiting formal approval to get FSD into China?
Right, and what I'm about to say, the Tesla people really don't like, because there's just a reality that I've come to terms with, that LiDAR systems are probably going to be necessary to have the precision to get regulatory compliance approved by not only China, but also in California and other markets, because we know that LiDAR works. So you see this in China. You see how far China has gone because they're so focused on bringing autonomy and EV technology to the Chinese people that they're making a lot of progress. And it was started by Tesla, but these Chinese companies are doing a phenomenal job. You can see how they're bringing the cost even down on building these vehicles substantially, which helped Tesla a lot this quarter. But I think the bottom line is autonomy, ultimately, vision-only systems are probably not going to cut it. And that's just something at some point Tesla's going to accept. And I think we're going to see that with Robotaxi, and he just hasn't said it yet.
Yeah, and more details of a cheaper car, too. Ross, I got to get your take on the rest of the Mag 7, just given the earnings season just kicking off. Do you think Tesla's going to be, despite what we saw, which was a beat in the earnings, are they still going to fall behind the rest of the big tech space? How are you looking at the rest of the Mag 7 now?
Yeah, well, I'm certainly happy they beat because I own the stock. So, I'd rather have it go up than down and then miss again, But that said, it doesn't solve Tesla's problems. Now, the rest of the Mag 7 are in different positions, and many of them are just dominating their markets and making huge amounts of money and growing at enormously fast rates for such massive companies. I mean, I've really never seen such concentration of business power, and legitimately, not because of unfair practices or whatever, but just really doing a great job at their businesses, whether it be Apple, NVIDIA, our top holding in GK, Microsoft, our number 2. So those 3 companies, I mean, we love Meta, which we should own, but because I don't like Instagram and I think social media is bad, we don't own it, but they're doing great. So no, social media is like the brain cancer for children. So let's just be real. So I'm away from Meta, even though I think the stock will go up, and they're doing great. So the Mag, America's doing really well. Like the business environment's really good. And despite what you might see in political rhetoric, markets are at all-time highs. The Fed's lowering rates. I mean, these are a pretty good environment. People are seeing wage gains, inflation's down. This is a good environment for investors, and you should take advantage of any dip in the markets to try to find things at reasonable valuations.
Ross, thanks for staying late with us. Ross Gerber, President and CEO of Gerber Kawasaki Wealth and Investment Management. We got plenty more ahead. This is Bloomberg.
And welcome back. We're into hour 2 of the China Show, and here's a look at the HSI a half hour into the session. Well, it's down a little bit, even though we are having positive sentiment coming over the debut on the market, the IPO of Horizon Robotics, backed by Alibaba and Baidu. It's up about 25% as we talk, 26% right now. So it's not a huge IPO, $649 million raised, far cry from the days of Kuaishou just 3 years ago of $6 billion plus. But again, positive sentiment towards new issuances, especially in tech here in Hong Kong.
Yeah, there is interesting to know from Goldman that just came through saying that markets have maybe priced a significant upgrade to China's growth in recent weeks, but maybe overpriced that growth so far. So maybe that's why we're seeing a bit of evidence of some overshooting here this morning in that pullback across prices here. And H shares are down about 1.5%. You take a look at the rest of the markets and how Asia ex-China is looking like here this morning, and it looks like it's doing a little bit better. You take a look at how Japan, Australia, Taipei, it's been slow going, but you're seeing some marginal gains here right now. A lot of the focus still remains in the bond space as well. I mean, yields have stabilized here of late, but we're still talking about 422 handles for that U.S. 10-year yield. So it's still the cautiousness that we're seeing across these markets is maybe due to that bond volatility once again. When you talk about pricing, right, when it comes to the Fed, it's less than 100% chance that the Fed's going to cut at the next 2 meetings before the year ends. So that repricing sort of narrative continues to dominate. And that's why you see dollar yen approaching 152, 153 levels here right now. And Ueda, didn't really help that too much too, Steve, right? And when he spoke at the IMF meetings saying, he's still kind of figuring out what the right size of normalization is going to look like.
Keeps him up 24/7, obviously.
Well, given
right
what
now,
happened in August, I'm guessing yes.
Yeah, so the dollar yen up to, 152 and change. So, people start talking at those levels. Intervention, maybe. I mean, we're not quite at 162 levels that we saw just a few months ago. But euro dollar, that's certainly one to watch. A question of the day is, are we going to hit euro parity once again, given that the market narrative seems to think that the ECB is going to be much more aggressive in these cuts than the Fed is going to be. You take a look at the rest of movers, and we're watching out for here today. Obviously, the Tesla story remains alive. SK Hynix coming out with record profits as well, but not doing too much for the stock. It's been all over the place. But yeah, property is one thing that's interesting, right? We're not quite sure why this is, we're seeing this retreat, but perhaps because this rally has gone on quite a bit here as well. China Resources Land also raising about 7.2 billion Hong Kong dollars through that placement. The shares were down about 4%. So that's one thing to watch today is but overall, there's not much really
I guess, conviction, you can say, in China of late. Let's get to our guest, Thomas Poullaouec, head of multi-asset solutions for APAC at T. Rowe Price. Thomas, it's interesting. I was reading your notes. Overall, you said you've increased your equity exposure to overweight, but also keeping the overweight in cash, which I thought was quite counterintuitive. Can you explain a little bit about that and why?
Yeah, sure. So on the overweight stocks, I think it's more of a 6 to 12 months basis because obviously you will have the volatility coming from the election that supports also our overweight to cash in the short term. But if I first touch on the overweight equity, it's more because of the economy being stronger than anticipated back in Q3. You have also earnings growth still high single digit or even double digit for some sectors. You have a broadening also of sectors being now recipients of that stronger economy. So we see that stocks should outperform bonds in the 6 to 12 months. But then if you look at more the next month or the next couple of weeks, you have quite a high level of uncertainty coming from the US elections and potential China response to that. And so we believe that we need to keep some protection and have some cash on the sideline to be used for buying more dips.
Thomas, how are you reading what the Fed might or might not do? Obviously, there's been increased bets on the pace of easing is not going to be as aggressive as earlier expected. That's having obvious effects on the equity markets and also the bond market. How do you read it? Are investors too dovish or not?
I think they are still too dovish, to be honest with you. My view has been that we would get maybe another 2 cuts by the end of the year and maybe 1 or 2. This is in line what history is telling us during a soft landing. During a soft landing, typically the Fed will cut rates on a duration of about 7 months, and they will cut rates by a quarter of their peak rates. So if history is any guide, we should be done by Q1. And the terminal rate could be around between 3.5 and 4%. So I think the market still has some cuts to remove from their pricing. And that is also what we see in the US 10-year, as you said earlier. 4.20 is only a sign that there are pressure to go higher on heavy issuances, on repricing of growth, and also the US elections with Trump's being favored now, which is pushing ahead the 10-year high.
Yeah, we talked about term premium. Now we're back to the highest levels of this year. In fact, maybe close to the peaks that we saw in 2023 on the back of what you mentioned, right? Resilient data. You also have this potential of some sort of clean sweep from the Republicans in this election. Is this why you're kind of steering away from the bond market here right now? And at what point would you actually re-engage in building more of that duration exposure once again?
Yeah, I think at some stage, bonds will be better than cash to protect against equity volatility. The so-called correlation benefit from bonds versus equity will be in our favor when there is more of a growth shock, so where economic growth is starting to roll over. We are not there yet, but what I mean is that 10-year yields could reach 4.5, 4.75. Even our CIO from fixed income, Arif Hussain, had an article this week talking about 5% on the 10-year. Look, this is perhaps the highest band of what we will be seeing. And at that time, it will be quite wise to re-engage in duration because of potential benefits from that correlation between bonds and stocks.
Thomas, what's your view on China? Obviously, stimulus kind of trying to tackle the deflationary problem there. Stocks went up, but they've kind of pulled back because they want more. I mean, what's your view on how much of a portfolio should be allocated towards China?
Yeah, so China, we have a strategic allocation to China in line with the weights in the emerging market index. And then we take views to overweight or underweight. Back in Q3, we were underweight China. And as a stimulus announcement came in, we found that it was wise to close that underweight. So we are neutral to China. We didn't change that since then, because we don't see that earnings have been, yes, they have been revised a bit higher, but on a relative basis, they are still quite weak relative to other markets. You have also the uncertainty about what would be the size of the stimulus, and because the sentiment has been increased quite rapidly and expecting figures that might not be delivered. In that case, that means that the upside is quite limited. And finally, valuation is not as attractive as it used to be, given that there was a very strong upswing in Chinese equity prices. Now valuations are more average compared to very cheap at the end of September. So we are neutral, waiting for further announcement, potentially after the US election, to see if really the sentiment that has been uplifted by previous announcement can be further beneficiary for the stock market.
And how do you stand in terms of where I'm going to get the best returns maybe by the end of this year, Thomas? Is it still the equity market? Do I look at gold? Do I look at other asset classes? Where do you see the most opportunities as we count down to the end of the year? You marked, right, a lot of risks, right, whether it's the U.S. election, whether it's Fed meetings that are all coming up.
Can I come back in 2 weeks to give you a precise answer? No joke aside, I think equity is still the one that should benefit from by the end of the year. What we have been doing in some of our portfolios is to use more options in order to get that upside convexity, but trying to limit the downside. Also, the value sector could benefit, and perhaps even small mid-cap could benefit because they start from a cheaper stance. And really, we see the broadening of earnings taking place. So we are still favoring the U.S. market and Japan to a certain extent. So this will be still the markets that we will be overweight by the end of the year.
All right, Thomas, thanks so much. Thomas Poullaouec, head of multi-asset solutions, Asia Pacific at T. Rowe Price. Well, we have breaking news, as you've seen on the strap there. Striking Boeing workers have rejected a tentative deal, this according to the union. This was going to be a tight vote, and it obviously has come down to the wire where the union is saying Boeing workers to remain on strike. This is even after a sweetened offer coming from Boeing last week that included a 35% pay raise over 4 years and a one-time signing bonus of $7,000. However, the deal did not restore the pension, a major sticking point of older workers at Boeing and several plants, assembly lines in the Seattle area on the 737 MAX and the 777 remain idle right now. Let's get to Danny Lee. He is our EV supply chain and aviation reporter. Danny, we knew this was going to come down to the wire. Is this a bit of a surprise since the offer from Boeing did offer considerable pay increases, but not what the workers wanted?
It's not a surprise given what we see is a 64% of members voting to reject this contract. So it still shows quite a large majority of workers not happy with the deal that was presented. And so for Boeing going forward, clearly it has to put more money onto the table in order to get this vote passed. And clearly by a sizable number that are rejecting this. And, you have to look at what happens next. Clearly this is a risk for Boeing because it is that threat from a ratings downgrade, a downgrade to junk, given the prolonged nature of this industrial action, which is into 6 weeks and longer. And so this is a blow because it's not able to produce the planes it wants, particularly of its cash cow 737 MAX, and therefore it's being deprived of revenue. And ultimately, the new CEO, Katie Upward, cannot fix the wider things that he needs to do to get Boeing back on track ultimately, and that's the wholesale restructuring of this great aerospace company.
Yeah, you mentioned, right, they're losing about $100 million a day in lost revenue as this strike continues. Danny, what can Boeing do at this? What's next? I mean, in terms of how far apart the union is with the company, what are we talking about here right now? What can Boeing do next?
Well, it does show with this vote result that the company and the unions are still quite far apart, and this is despite the intervention from the Biden administration. And the risk is the longer this goes on, the longer this is out of the hands of the current Biden administration, potentially, as we fall into the election period. We're not too far away from that. And so Boeing clearly is going to have to offer a lot more money, but to what end it can get around the table with the unions quickly to up its offer. And because the rejection, as you mentioned, Steve, the pensions issue, that is not going away. Something that was changed in 2014. That would be a substantial amount of money that would be Boeing would be giving up on. And so it probably doesn't want to do that, but maybe more money on the wages side could bring this strike to a conclusion.
Danny, what does this mean longer term for Boeing? And obviously there's been the delays of the next generation 777X. Where does this put Boeing at a competitive disadvantage as it tries to obviously bring out its next generation aircraft?
I mean, the disadvantages are really that it still has a product, the 737 MAX, for example, which it can't produce on a fuller scale. We've heard Kelly Ottberg talk about wanting to produce a new aircraft, potentially to replace the 737 MAX. But Boeing and Kelly cannot focus on that whilst it still has this strike to contend with, whilst it has to restructure the entire business, particularly around just the commercial jet business as well. So there's a lot of headwinds here that the company is trying to manage overall, and particularly with the strike and the cost, the cash it's burning. This is a real distraction right here, right now.
Yeah, a follow also rippling through the suppliers as well. Danny, thank you for bringing us the latest there. Danny Lee, there, our EV supply chain and aviation reporter, joining us today from Bangkok. We'll still ahead on the China show. Chinese and India leaders have their first meeting in 2 years to discuss strengthening ties and managing differences between their countries. We have the details coming up next. This is Bloomberg. All right, we're watching the yen here this morning, and we are getting some lines from the finance minister speaking in Washington about these moves that we're looking at when it comes to the currency. So it looks like they were talking about one-sided rapid moves in the currency market, and they're watching these FX moves with a stronger sense of urgency. But when it came to FX, they didn't discuss FX in the G20 meeting today, and they likely won't discuss currencies in the meetings tomorrow as well. You're not seeing a whole lot of movement, but we've come off a little bit from that 153 level, which we touched overnight, Steve. But yeah, there's still a lot of forecasters out there that are saying, look, the BOJ, they're still not quite clear when they're going to normalize next, right? I think the survey that came out recently was that we're going to overlook maybe the next meeting, but maybe December, January,
yeah.
that might be where they might move next.
We do know that Governor Ueda is staying awake 24/7, thinking about this all the time. So we'll have to see. I mean, the 152.58, when do we start talking about the big I word in intervention for the Ministry of Finance? We'll have to see. All right. Well, Chinese President Xi Jinping has met with India's Narendra Modi in their first face-to-face talks since, I believe it was the G20 in Bali back in November of 2022. The meeting comes after they eased a 4-year border stalemate. But Bloomberg Opinion managing editor Ruth Pollard thinks deep distrust remains. She joins us now from Tokyo. So, Ruth, it's hard for me to believe that these two are going to have a no-limits partnership and friendship all of a sudden. What can we expect from, I guess you could say, a little bit of a rapprochement between India and China right now?
Well, there's definitely been a thaw in these relations, and it's a very positive sign that Prime Minister Modi and President Xi met in Russia yesterday. But I don't think we can expect any immediate change in India's policy, particularly around its very strict oversight of Chinese investments into India. We may see perhaps some easing of restrictions on visas for Chinese technicians travelling to India, and there may be a resumption of direct flights between the two countries. Now, even that would be a good first step, because we know businesses in India have been pressuring the government for some time now to ease these restrictions. They know that India can't become the manufacturing powerhouse that Modi dreams of without China's money and its expertise.
Yeah, we've come a long way, I guess you could say, from 2 years ago, Ruth, but what do you think is really driving this thaw in relations?
Well, like everyone, both India and China's attention is partly focused on what's going to happen in the US election next month. And with polls so evenly divided and the possibility of a return to the White House of Donald Trump, I think both nations, both India and China, could do with one less problem on their border. And so a thaw comes at a pretty good time for them. Also, I think China is very keen to see India keep and maintain its very independent foreign policy rather than drifting closer to the West, as China feels that India has done, in particular with its involvement in the Quad grouping, which is seen as a regional grouping set up directly in contest to China.
How much would you say that the differences over the contested borders in the Himalayan region really resolves this, or is this just more thawing, if you will, but not a long-term solution?
Well, I think resolving the tensions on the border in the Himalayas was key to allowing this bilateral meeting between Modi and Xi to happen. The border tensions have been a constant irritant in the relationship between the two nations since 2020, and it's really clear that there is still a great deal of distrust between India and China, both at the political and diplomatic level, but also at the military level. And so I think if we can see both nations build trust at the border, resume patrols as normal and avoid any outbreak of conflict there, then it will allow the business and diplomatic relationships to progress as well.
Bloomberg Opinion Managing Editor Ruth Pollard, thanks so much for joining us here on The China Show. We'll be talking more about India-China relations in the next hour with this gentleman on your screen, the former Indian envoy to the United Nations, who thinks more work is needed to restore trust between India and China.
And Steve, we got some breaking news this hour when it comes to Elliott Investment Management and Southwest Airlines. It looks like they are nearing a settlement that could avoid a proxy fight for control of the carrier's board. That's according to people familiar with the matter. So it looks like the two sides are discussing a bit of a framework now that will result in the shareholder activists receiving several board seats, but less than a majority, according to our sources here. And so nothing has been finalized, but it's possible that settlement could fall through even, or the framework could change. But yeah, a lot of questions of what this means for the CEO of Southwest, Bob Jordan. We heard the chairman, Gary Kelly, has already agreed to step down at the company's next annual meeting. So we'll keep watching this one very closely, but our sources telling us they're at least near some sort of settlement. We got plenty more ahead. This is Bloomberg.
And welcome back. You're watching The China Show. Here's a look at some of the top global headlines. Well, Vladimir Putin says the BRICS grouping shows that a multipolar world is being created to challenge the U.S.-dominated global order. The Russian president hosting leaders of the newly expanded bloc this week. Putin says more than 30 nations are interested in joining the group, but current members are split over the idea of further expansion.
The BRICS states stand united in their support for intensifying cooperation in the global arena based on the key principles of the UN Charter, and jointly strive to contribute in every possible way to the formation of a fair multipolar world order with the decisive participation of the countries of the global south and east in the systems of international governance.
Meanwhile, U.S. officials say North Korea is sending troops to Russia, confirming the movements for the first time. National Security Council spokesman John Kirby says about 3,000 North Koreans are training at 3 sites in Russia. And U.S. Defense Secretary Lloyd Austin says there's a serious possibility they will be sent into combat.
We are seeing evidence that there are North Korean troops that have gone to Africa. Now, what exactly? Not Africa, but Russia. What exactly they're doing, left to be seen. These are things that we need to sort out. We'll have more for you on that later. But yeah, as we continue to look at this, there is evidence that there are DPRK troops, in Russia.
Elsewhere, at least 7 people are dead in the Philippines as Storm Trami swept through the main island of Luzon, bringing widespread flooding and strong winds. Officials say nearly 200,000 people have been displaced and dozens of flights canceled. The Philippines has canceled currency trading for a second day and suspended government work due to the storm.
There's a market check to watching some movers out of South Korea right now. Korea Zinc certainly is the big one today. We're up some 30% for that stock here. So we're waiting results of the stock buyback that was initiated by the chairman in an effort to defend the world's biggest zinc smelter from that $12.5 billion takeover offer from Yongpun. And Yongpun is, of course, their biggest shareholder. Those shares are also surging this morning. And we are also watching some of these solar stocks in China after we're hearing that China may publish this policy to cap polysilicon power usage. This is Bloomberg.
As a result of a long period of 0 to negative inflation, inflation expectations have been changing very, very slowly. And that was, in a sense, lucky for us in our attempt to normalize policy, although it's still taking time for us to get to 2%.
BOJ Governor Ueda there on the central bank's inflation expectations. 11:29 a.m. in Tokyo. Yeah, we can't see that bump shot, but yeah, we're heading into that lunch break. Where equities are not doing a whole lot. We're pretty flat in the Nikkei 225. Topics is lower by about 1/5 of 1%, but still watching the yen very closely after we weakened some 1% against the dollar overnight. We're coming back a little bit from that, but we're still talking about 152 levels, Steve, which is the weakest we've seen in a few months.
Yeah, that's right. Let's bring in our Japan economy and government editor, Paul Jackson. So, Paul, we just obviously heard Governor Ueda there speaking in English that he has a number of different issues that are keeping him up 24/7. What's at the fore of his insomnia?
Well, what we're seeing is he's worrying about the timing of his next rate hike. Obviously, there was some major speed bumps after the July rate hike. BOJ was kind of partly blamed or linked to the market meltdown we saw in August. So, yeah, obviously that's generated some caution amongst policymakers about the speed of raising interest rates. We've also got a general election here in Japan, and the Prime Minister at one point was weighing in saying Japan wasn't ready for interest rate hikes. So there's all these kind of forces that might be weighing into kind of holding back and being a bit cautious and perhaps waiting till next year. But the thing we have to remember is that Ueda, our governor at the Bank of Japan, is a normalizer. He wants to get policy back to normal, and he wants to generate a cushion so that if there are shocks in the future, he's got interest rates at a higher place. So I think he does want to go. And if you look at our survey of economists, over 50 economists surveyed by Bloomberg, that's out this morning, over half of them are expecting him to go in December. And by the time we get to January, we've got like 85% of economists expecting him to move by January. So I guess what's keeping him awake is, does he go in December or January?
Yeah. And we heard from the finance minister, too, in D.C., talking about they're watching these FX moves with a strong sense of urgency. So you're hearing a little bit more of that, I guess, verbal intervention. But at these levels, 152, 153, Paul, do you think we're really on intervention watch now for the yen?
I don't think so. I think we're a ways off yet. Is it a concern? Yeah, absolutely. But we've got a lot of uncertainties coming up. We've got the result of this Japanese general election, which is coming up on Sunday. Then, of course, we've got the really big one, the US election, coming up. You know, some of these factors. I've also got the Bank of Japan decision next week. Almost everyone expecting just a straight hold there. But I think with these events coming up, you know, who wants to spend more money propping up the yen? Japan's already spent over $100 billion propping up the yen so far this year. Does it want to enter and then find that events actually help it and put the yen back to a better spot later? Probably wants to look at the conditions and hold off. But I still think we can't rule out intervention. But I think you know, something like that could happen if there's a slide in the currency after any of these election results or after the BOJ decision next week.
Yeah, Paul, the big question is how effective would it be when this is really a yield differential story, and with bets coming off, you know, off the boil that the Fed will ease more aggressively. So, again, would intervention help stem the slide in the yen? Probably not, right?
Well, I mean, I think intervention is always like a kind of a tool for just, biding time. Buying time, if you like. What I think we could see is we had in the Bloomberg offices here in Tokyo recently, Kazuo Monma, former director of the BOJ, he was saying the decision in July to raise rates was 80 to 90% focused on the yen. So if you follow that logic, I mean, I think he was overstating the case there, but the FX is certainly a factor in the BOJ's thinking. So if the weakness continues, then I think the BOJ is going to feel like it has to move in December rather than January, and maybe even start hinting at that a little more strongly.
Paul Jackson, thank you. Our economy and government editor joining us out of Tokyo on all things Japan here this morning. A look at some of the top corporate headlines now as well. French fashion group Kering warns that its annual profit will slump to the lowest since 2016 as weak Chinese demand hampers its biggest label, Gucci. Kering expects only $2.7 billion in recurring operating income, which is below analyst expectations. Comparable sales at Gucci slumped 25% in the third quarter. IBM fell in late U.S. trade after disappointing sales for the third quarter, hurt by slowing consulting demand. Revenue rose 1% in the period, just missing analyst estimates. IBM CFO says clients are not expanding budgets and some generative AI projects are coming at the expense of traditional consulting. And luxury retailer Hermes is expected to show the impact of the industry spending slowdown in its upcoming results. Analysts expect the weakest quarterly sales growth since 2021 on slowing Chinese demand. Bloomberg Intelligence says while Hermes is traditionally more resilient to consumption weakness, even forecasts for about 10% organic sales growth will be optimistic. And Bloomberg's been told that TSMC has halted shipments to a client after discovering that its chips found their way into Huawei products. Sources say the chipmaker has since notified the U.S. and Taiwanese governments of the incident and is investigating. Huawei has been on a U.S. sanctions list since 2020. All right, sticking on to chips here, and we'll take a look at when it comes to SK Hynix, right? Well, the shares are up 1.5% here right now. Record quarterly profit and revenue, and really reflecting that strong demand when it comes to AI and for, of course, SK's memory chips. Let's bring in our Bloomberg Intelligence senior analyst, Masahiro Wakasugi, joining us now. So it looked like it was a bumper quarter in some ways, Masa. What stood out to you?
Yep. SK Hynix reported quite strong revenue and operating profit. If we look at the revenue, it's almost doubled, and if we look at the operating profit, it's reached 7 trillion won, slightly above the consensus. And if we look at the HBM revenue, it's up more than 330% year over year. It's about 4.3 times, and sequential growth was around 70% for HBM. That's AI DRAM chip. chips. So the earnings were pretty much driven by AI-related products, and operating margin was also quite good, and it reached about 40%. And we think that the DRAM operating margin should be higher than the corporate, over 40%. And if we look at the HBM operating margin, which should be higher than the overall DRAM, so SK Hynix is benefiting from the AI trend at this point.
Mas, obviously it was a fairly good set of results, but are there any concerns that you can see from their report for SK Hynix and also, of course, the memory chip market? Are there any harbingers in there, like for CapEx spendings, that kind of give you a reason to pause, or was it all pretty positive?
Yes, that's an important point. I think that if we look at the AI demand, that's good, and that should continue to be good going forward. But if we look at the non-AI applications, including PCs or maybe smartphones or general purpose servers, the demand may not be as strong as AI. So actually, if we look at SK Hynix DRAM bit shipments in Q3, so bit shipments in Q3 were actually down Q-on-Q. And the SK Hynix was able to overcome and more than offset the weakness due to the strength of the higher priced HBM. But if we look at, say, Samsung Electronics, maybe they may not be benefiting from so much from the latest HBM. So whether the company has a high exposure to the most advanced AI or not should be the very big issue going forward. So we will have some more companies reporting earnings in the coming few weeks. And if the companies have a strong exposure to AI, their earnings should be fine. But if they don't have enough exposure to the AI, their earnings might not be as good as in SK Hynix reported.
Yeah, I mean, they obviously have that lead when it comes to those HBM chips, right, for SK Hynix. What do you think is causing that sort of difference between SK Hynix and rivals like Samsung right now?
Yes, so we remember that SK Hynix had a very close collaboration with NVIDIA to develop the HBM3, and that was last year's major product. And Samsung was good at HBM2. And maybe at this point, SK Hynix should be still collaborating with NVIDIA for the most latest HBM3E. So SK Hynix is keeping this lead. And it seems like SK Hynix has a better technology solution for the stacking of the HBM products and compared with Samsung Electronics. And eventually the gap may narrow, but as far as we hear from SK Hynix story, 2025 should be another good year for SK Hynix due to HBM development.
Masahiro, thank you. Masahiro Wakasugi there, our Bloomberg Intelligence senior analyst, joining us on the latest when it comes to SK Hynix. We got plenty more ahead. This is Bloomberg.
And welcome back to the China Show. And there, of course, is the listing ceremony of Horizon Robotics, debuting in the Hong Kong market with the bang of the gong this morning. And it was a big pop upwards in the early going. Can we bring up that stock and we can see where it's trading right now? At some point, it was up by about 26, 27%. What's it doing now? Yvonne, do you have that? No?
I believe it's in the double digits. Let me continue to watch this right now.
Maybe we can bring that up on the screen.
So we're up about 28% or so.
It's doing well.
Yeah.
All right. Let's bring in Bloomberg's Felipe Pacheco. He joins us now on Horizon Robotics and the IPO. Tell us how significant this one is, because it's not a huge listing. They raised $696 million, a far cry from the likes of Kuaishou 3 years ago, but it also sends the market a good signal, right?
That's a very good point. You're right, the size is not huge, especially if we compare to a few years ago, those gigantic tech IPOs that we used to have here in Hong Kong. But this could not be better considering the context that we have in the city right now. Bankers are probably happy. Founder of the company is definitely happy because this sends a very good signal. This was a company that attracted some very important names to its IPO. We're talking about the sovereign wealth fund of Norway was a buyer of stocks. We had Baidu and also Alibaba as cornerstone investors. It was priced at the top of the range. There was very strong demand by institutional investors, and we do see a pop today. That's exactly what the market wanted to see in order to bring more listings to the city. I think that the moment is we keep hearing from bankers, from institutional investors that we need to have a sequence of good deals in order to bring the mood back to the market. And I think after yesterday, we had China Resources, Beverage Resources, listing with 15% pop. Today is definitely a good day for Hong Kong and for the company, of course.
Yeah, in terms of IPO proceeds, I think we've already surpassed last year's total, which is a good sign. Tell us a bit more about Caillou, the company's founder, who, as you say, has now become a billionaire.
I'm sure he's very happy as well, Yvonne. With the stock at around 30%, as you just mentioned, his net worth, his personal fortune is estimated at about $1.2 billion US dollars. Of course, mostly on the back of his stake in the company. We pushed out a profile this morning about him, and he's a very interesting character. He's seen as an AI specialist, one of the references within academia and also within the private sector in China for hardware and software for autonomous driving. He had appeared within Baidu, that he was actually the one kickstarting the company's efforts and research for autonomous driving. And he spent over 10 years in the U.S., between the U.S. and Germany, also working with the likes of NEC, their lab in North California, and also Siemens in Germany early in his career. So he's a very well-known name within China and also outside of China for anyone that's actually close to the auto industry.
Felipe, thank you, Felipe Pacheco there, joining us on Horizon Robotics. Let's stick to Hong Kong and talk a little bit more. Yeah, we got to keep the positive vibes going, right, Steve?
Always.
Not just something that comes to the IPO market. Let's talk a little bit more about the wealth management industry as well. There's a new Bloomberg Intelligence report forecasting that private wealth assets under management in the city will nearly double by 2030. That's thanks to inflows from mainland China. Let's get to our senior research analyst, Sharni Wang. She joins us now, who did a really deep dive into this. A great read, really. And it's interesting. You mentioned this, the growth that we're seeing in private wealth in Hong Kong. First of all, what's driving that?
Yes, so there's mainly two key factors. One is local household wealth. We've seen a flood of migrants coming into the city recently, with the Hong Kong government saying that they saw 380,000 applications, since late 2022. So I think that is a really big driver. But also keep in mind, during protests and COVID, the industry actually still saw net new money every single year. So even without the new migrants, I think there is still a very fundamentally good support. And then the other piece would be on the cross-border side. So that's mainly driven by mainland China. And, given that they're so underinvested overseas with the capital controls, where FPI, which is our foreign portfolio investments, it's only 6% of GDP. And that compares with 100% for countries like the UK and Japan. So there's just huge opportunity for Hong Kong to tap that.
Are they doing enough? Obviously, this is a priority of the Hong Kong government. They've seen family money, family offices go to Singapore. We know that Switzerland is the big wealth hub, if you will, attracting cross-border flows. But again, I'm going to be at an event in a couple of weeks where they're going to be trying to attract sovereign wealth funds, pension funds, and the like to Hong Kong. At what point is that the goal, to surpass Switzerland as the top destination for these cross-border funds?
I don't think the goal is to top Switzerland, but, with the growth drivers, I think that's definitely going to be the key trend. I think we expect Hong Kong to top Switzerland by 2025, which is a lot earlier than estimates out there, saying around 2027 to 2028. And the biggest driver is definitely mainland China, right? They've got the policy support where the regulators continue to expand the scope of the cross-border infrastructure like the Stock Connect, Wealth Connect. Also, the onshore property slump. That's actually great for wealth reallocation, right? So that people will invest less in investment property, while overseas investments, which are high yielding, that's becoming increasingly attractive. So I think, these are key drivers. And of course, the overall diversification with geopolitics. I think Hong Kong should see money from everywhere.
Yeah. What about family offices? How well is Hong Kong doing in terms of attracting them to come here in the city?
Yeah, so Hong Kong has a lead over Singapore right now, with 2,700 single-family offices, where Singapore only has about 1,650. And I think going forward, Hong Kong could extend that lead because the MAS, which is the Singapore authority, they continue to clamp down after the money laundering scandal. And then also on tax concessions for large-size family offices, it's actually better in Hong Kong. So I think in the near term, Hong Kong could have that edge.
All right, Sharni, thank you. Sharni Wang.
Thank you.
Make sure to check out her report, of course, on the Wealth Hub of Hong Kong here. You can get an insider's guide to the money and people shaking up the finance hub in our Hong Kong edition newsletter that is out every Thursday, which is today. So make sure to check it out. You can sign up through the website, Bloomberg.com/newsletters.
And welcome back. You're watching The China Show. LinkedIn says the labor market is brimming with change thanks to the rise of AI. CEO Ryan Roslansky told us exclusively how the new technology is being used to career development as younger users fuel a content shift.
So I think a couple of trends that we see right now are across the board just the need for people to really upskill in what they're doing. AI skills, but also human skills, I think, are really in high demand across the board. For the first time on LinkedIn, we're seeing a lot of growth outside of kind of the core knowledge worker, and that's especially happening in India and Indonesia. So small business owners, freelancers are really starting to gravitate towards the platform. So the more people that join, 7 per second, just the more insights we have across the globe. And it's really interesting to see those patterns. But for me, really the idea that, again, if you're not changing your job is even changing on you. It's just a really important thing for people to grasp right now, especially as AI takes more shape in the labor market.
So is the labor market resilient, for example, in the U.S.? Is there any indication to show that it is?
I think across the U.S., it feels very resilient. It feels more resilient in certain sectors like healthcare and manufacturing. It felt less resilient a year ago in tech, but tech's feeling much more resilient, especially in the AI sector, especially in Silicon Valley, than it did a year ago. So I'm seeing some decent strength in the U.S. market right now.
So you talk about how the Asian market is really strong, and I can only imagine you want to grow it. What is the strategy that you want to implement in this part of the world?
One of the things I've learned for sure on this trip is just how important small businesses are in Asia. We've historically, focused the LinkedIn platform on our customer base on larger enterprises, and for us to really break through in Asia, the focus on small business is going to have to be a key. Then secondly, the labor force in Asia is, it's just a much younger labor force, a labor force that is used to navigating any product, any kind of social product through video is the medium by which they consume or share content. So a real push into video as well, and short form video on LinkedIn is going to be an important way to help professionals stay informed on the platform, make connections and grow their network through video as the medium.
Right now, there's a lot of focus on the US election and perhaps AI generated misinformation. How are you countering that on your platform?
To a large extent, LinkedIn exists as a platform to create economic opportunity. What you share on LinkedIn is attached to your real identity, your resume online. So we don't face a lot of the issues that a lot of other platforms may face where there's not real identity. But to the extent that, we still have a lot of the same, trust in place across the board, through AI and human review, things get reported. But there's not a lot of political content on LinkedIn. In fact, in 2018, we actually, disallowed political advertising altogether on LinkedIn. So it's not really a place where, politics are happening.
And you can catch the full interview on Insight with Haslina Amin. That's coming up next. We're going to pass the baton to Haz any minute now. That's it for us here at The China Show. Insight with Haz is next. Stay with us.